In this trading video, let's go over some basic order functions. So now, one of the most important things that you can, number one, do is use limit orders. A lot of retail traders will use market orders. And if you're really not that proficient, or if you're not already consistently profitable, I highly recommend that you use limit orders just because it makes you plan out your trades more. And therefore, you'll have better results just from the mere presence of you planning it out and sticking to a plan. So what we're looking at here is we're looking at the dome of gold. Now, when I say dome, dome just means depth of market. And all that means is simply you have the bids on the left side, you have the current price action in the center, and then you have the ask on the right side. Now, all of this information where you've got, so 8, 3, 7, 9, 18, 2, 10, really not that important if you're planning out your trades. This is really just a game of high stakes liar's poker where you may actually have someone in here bidding for 7 contracts at 1651.90, and you may not. It just kind of all depends on whether they get filled or not. What's really important is what's going through this center column, which is called the time and sales or the cash register tally, and it tells you what the price action was and how many contracts were executed at that price action. That's more important than remember, a bid is not a buy and an ask is not a sell. It's an implied buy or sell. It's a real-time auction. So even though the price action may go through here, people do have the ability to pull their orders before they get filled. So let's talk about some basic order mechanisms. So if you were going to do just a basic market order, you just hit buy market or sell market. I'm going to pull this in here so you can see this. And these buttons are buy market, sell market, buy trailing stop, sell trailing stop. So one of the better ways to do this is, let's say that you were thinking gold was going to go up, and instead of just buying it at the market, which you could just do it right here, just go boom, and you would buy one limit. You could just go buy market like I just did right there. That's a buy market order. All right, so we got filled at 1651.80, and now what I'm going to do is I'm going to flatten this really quickly here, and I will just flatten it and get close. So we lost 2 ticks there on it, all right, because it was kind of an impulse trade. We just wanted it because we wanted it. A more important way or better way of trading would be a buy order, okay? So what you want to do here is when you're doing a market order, it's just going to go to the most recent bid or ask and give you the worst fill. Now, if you wanted to do a buy limit, you could click here on this left-hand column, and you would have a buy limit when the price hits 1651.80, you would get filled at 1651.80 or better. And then you can see that you've got the opportunity to do what's called a buy stop. So if the price action goes above 1652, you could do a buy stop. Now 1652.30, that's a limit order at the most recent market price. And anything above the most recent price action plus 1 or 2 will give you a buy stop. All right, so it's going to stop you in. If price action hits 1652.60, it'll turn into a market order. You can do the exact same thing on the right-hand side. This you would sell limit, and as you come back down towards this, then you would do a sell stop. And really the most important thing to do is just think of the price action ladder. The most current is in the center. If you go above, it's going to be a buy stop. If you go below, it's going to be a sell stop. And if you want to do a buy limit, below, or sell limit above. So those are some order mechanisms that you need to be acquainted with and know how to work those. Good luck. Hope it helps. See you on the next video.